wanted to talk about credit monitoring today because this has happened a couple times here recently. I want to explain what it is, why it's important, and what you need to know. So at the beginning of your home purchase or refinance transaction, we pull your initial credit report, right? And we get your credit score and we get all that on file. All your debt that's in that report goes into our system and all of that. Then you either decide to refinance, you move forward, or you get under contract and you're moving forward with your home purchase. One thing that happens it can happen at any time throughout the process. We put a credit monitoring system in place because we want to know that if we've pre-approved you with certain debts in your debt ratio, that there are no new debts that are going to occur before settlement. Because if new debts occur, you could then not qualify anymore because your debt ratio would be too high. This just serves as a reminder that once you decide to get into the mortgage process, whether it be for refinancing or purchasing, do not apply for any credit. At the very least, it will create more paperwork because they will see that you have inquiries on your credit report, additional ones after application, and then we'll have to go and explain each inquiry. Then you have to say whether you got new debt or not. And if you got new debt, then we have to make sure that we have to get the documentation because the new line is not going to be on your credit. So then we have to get new documentation. We have to figure out what the new balance and the new payment is, and we have to make sure that you still qualify with that payment. Best case scenario, it just creates more paperwork, and a lot of times it ends up creating it at the very last minute, which is it creates stress for all parties at the last minute, which we do not want in the mortgage process at all. It's already a stressful time moving or refinancing, just with having to submit documents and all that kind of thing. And then with a purchase, it's stressful too because you're moving and all that. So the best case scenario is it's going to create more paperwork no matter what if you apply for new credit. Worst case scenario, if you've applied for new credit and you got new debt, the worst case scenario is that you are then not going to qualify. So I can't stress enough, do not open any new credit after you've applied for the mortgage. Some people I think, oh, well, they've already pulled my credit, so I'm fine. They won't know that I applied for new credit or got new credit. Guess what we do? It's called credit monitoring. So we have that on your file and we end up pulling it at usually towards the end of the file because we want to know that as close to closing as possible, there's no new debt. If we did it in the middle, there's that window between the middle and the end that you could still get debt, and we don't want that. So we do it it's like one of our last steps, and people just don't realize it. So I'm taking the time to educate. It's happened a couple times here recently, so I'm realizing that people either forget what they heard, they don't even know that it exists or anything like that. Hopefully that helps. I think I covered it all. If you have any questions about anything related to the home buying or mortgage process, I'm always here to help, or anything else, real estate in general, or anything. I'll see you soon. Take care.